The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a look at how the market trade closed out on Thursday as we saw a WASDE report that didn't give us a whole lot of fodder to really chew on. A couple tweaks on the corn side that were noted. Things were relatively neutral, it seemed, in soybeans and in wheat, whether we're talking U.S. or the world side for that matter. Tariffs, of course, continue to be a major talking point across the broader market trade. Let's dive in and get some perspective on things. Joining us for a conversation, Brian Doherty, Senior Market Advisor with Total Farm Marketing. And Brian, good to talk with you again this week. And we were kind of joking off air just a little bit. It's felt like a windstorm has blown through these markets as of late. And another somewhat volatile day, maybe a little less volatile day on Thursday, Brian.
And there's so many different markets that are moving in. So the big ones you're seeing in the news, of course, is the stock market, and the Dow Jones had a record up day yesterday. So did the S&P, NASDAQ, taking a third of that back today. Right now, down 1,000, but down 2,000 earlier in the Dow. So a lot of movement there, Jesse, and just a lot of positioning, opportunity, yet at the same time fear. And it's in all markets. But to your point, a nice tweak in the corn market today. Got that 100 million bushel decline in projected increase in carry out. So it took let me start over. 100 million bushel increase in exports, which reflected a decline in the carryout number. Something a lot of us were kind of looking for, or I'm going to say, looking for last month, and then we termed it after the report. If you might remember, we said, well, it looked like they kicked the can for another month. Well, the good export sales to date just needed a revision, and we saw that today, and that's good to see that reflection there. And it'll be some time before the Brazilian corn is available to the market. So for now, if the world wants corn, it's got to come to the U.S., and corn prices are reflecting that, up 8 in July today and 9 in May.
Well, and I think we talked about this a little bit last week, and I know I've brought this up to a number of folks that I'm impressed with how well this corn market has digested all the tariff news and much more. And then we get the cut there and the tweak on the balance sheets here today. And it just seems like this corn market has, up until Thursday's WASDE, has had so much bullish information thrown at it. It almost feels like we found a value range in corn. I guess that's what I'm trying to get at, Brian.
Yeah, I think you're seeing value, and then again, I'll give my 2 cents worth, which I've repeated ad nauseum for the last year and a half. But I continue to believe that the amount of corn out there in the country is a little bit lighter, because I never really wanted to kind of fall into the full belief. I wasn't totally on board with the USDA raising the yield at the end of 23 in November and January. And so I think we came into the year with a little bit too much on the books, and the cash market and the futures market seems to be, telling us otherwise. To your point, the corn market really hasn't had what I'd call a lot of bullish news. Now, this was a good report today, but it did. If you look at last week, you started out with an acreage number that was bigger than expected. No change to the quarterly stocks. And that's why today's number was a little friendly, because you'd think that quarterly stocks number might have come down a little bit, but it didn't. And then on top of all this tariff news, but corn prices finished the week higher last week despite tariffs, and they've been higher this week. So I think the market is finding value. And probably the big things that, big picture, is China's not buying U.S. corn anyway. Their imports of U.S. and world products is down considerably this year. They've stockpiled things. They're holding on to things. They're trying to progress in their own production fashion. We'll see what that brings in the year ahead. But the rest of the world's buying. And Mexico in particular has bought a lot of corn, and they did not reciprocate with tariffs. So when you have 70, 80 countries coming to the U.S. to maybe renegotiate, it gives me a lot of hope that a lot of these developing countries, and countries that you don't hear much from, but yet when you look at the balance sheet, they're buyers of U.S. corn, and we're doing it without China. So that's the good news, is we've got that. Right now, though, the maybe not so good news for upward projection in price would be, I think, a pretty good weather forecast to get field work moving pretty fast, I think, into next week. Now that's subject to change, but we had 6 days in a row with the western two-thirds of the Midwest, Jesse, with above normal temperatures forecasted, below normal precipitation. That ought to open the window for field work to get underway.
I should ask you about soybeans. We've seen a couple days of a rally here in the market. I think a lot of that tied to all of the tariff headlines. But interestingly enough, China being such a, traditionally a fairly sizable buyer of U.S. soybeans, even though it's not that time window right now. Um, it's just, we've got a bit of a rally here, this bean market. There's rumors that some cargoes of beans that have already shipped are going to make it to China. It sounds like it's Sino grain. But when you really look at China US relations and when it comes to the soy complex, I know that there are a lot of folks who are rightfully concerned about the big picture here. I mean, what's your thoughts on tariffs impact in this soy complex, Brian?
I've mixed thoughts on that. One, on a day-to-day basis, it's what's headline news and what's important, and we saw that it was important uh, in what 2018 when the tariffs kicked in, right? It just kind of left a big thud in the marketplace. Since then, China's had a big supplier development out of Brazil, and yet we don't think that they cannot not buy U.S. beans. On the other hand, they haven't been buying. But this is the time of year where typically they'll start, moving in and buying U.S. beans as supplies out of the Brazilian or the South American theater begin to lighten up or thin out a little bit, but they've got time. So I don't think that from a tariff perspective, there's two things. One, it's real healthy for our bean market with the idea that China won't buy U.S. beans, and they're in a trade war now, or trade escalation, I think as some have called it. Yet there's time, and the other side of that coin is beans are still a cheap product. They're just cheap. There's not an incentive to grow them. They're so cheap. So the bean market several times now kind of capitulates under $10 and doesn't want to break apart. And now you have tariff news, and they still don't break apart. So I guess from my perspective, kind of the step back, big picture perspective, bioenergies, good use for beans, lack of farmer selling when prices go lower. That doesn't take away the downside risk here by any stretch, but you're seeing a market that's buying the dip, not selling into weakness. And that's what we saw this week. It was a really impressive week. Soybean meal is a good value at $300. Soybean oil is still low on the big picture. Beans are still low. So it seems like the trade or the end user is going to pick up and purchase anyway. And I think the backdrop to that really, though, is you look at the acreage decline. What really is it going to be in soybeans this year? It's got to be closer to 4 million at this point.
How about over in the wheat complex? We did see a little bit of pressure there on Thursday. I wouldn't call it a bad day overall, just felt like we didn't have much to really move that market a whole lot, and we just kind of grinded our way a bit lower. What's your take across the wheat complex, Brian?
It's interesting you use the words bad day. I wouldn't call it a bad day. I'd call it a really disappointing day. So prices had some good steam this morning. July wheat had traded at its highest level since the 25th of March, slicing right through the 21-day moving average, and then flipped over and just kind of sagged and kind of just disappointing. The USDA reports, as you and I talked about beforehand, just not much there to sink your teeth into if you're bullish or bearish. I'd still like to think that from a perspective of less than ideal conditions, I'm not sure the Southwest has the best weather forecasts of the plains, and I think that could be impactful in the weeks ahead. That being said, softened up today in Kansas City, down 7 on July and down 2 in Chicago. So it looks like the traders were a little bit less concerned today. Big picture perspective, wheat is still struggling. It needs a catalyst. It's got the backdrop for a bullish market because of lower production in the Black Sea region, lowest acreage in the U.S., the second lowest in the last 100 years, and yet it has to have something trigger that. And unfortunately, it just doesn't seem like the money flow is interested in buying wheat on rallies. So it's more base building. Again, good value to end users, but no urgency to buy aggressively.
We are talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing, here today on the show. And Brian, let's go over to the livestock complex. Another down day in cattle, which it just seems like cattle and the stock market have been intertwined here in recent sessions. I mean, that's the best way I can explain it. I'm not seeing anything else, Brian.
Talk about a marriage, for crying out loud. Yeah, as soon as the stock market flipped yesterday, went from negative to just strongly positive. It pulled cattle or cattle pulled it or something, but cattle went for the ride. And then today kind of flipped over again. The growing concern in the meat complex and proteins is just talk of, tariffs and higher prices and recession and less consumer dollars in demand. And, I'm not trying to talk either side here, but when things become a little bit uncertain, I've noticed that often the media reaches out and finds people who are very concerned, right? And you get that repeated over and over and over again. Maybe all true, maybe not. But the point of it is, it seeps in, and so the consumer, and maybe rightly so, I think might be a little cautious now. We talked about, can we've talked about this for 6 months. Can we develop new demand markets at higher prices? And my argument has been no, but we were able to maintain demand, and those who are going to buy beef are going to buy beef. Probably still the case, but still, just a generalized sort of backdrop or concern. Now, that being said, looking at recent trade and cutout values, the flip over in futures, looks to us like the futures market, both in April and in the June, are probably undervalued right now. So I think they follow the stock market down today, but I'm not so sure that June cattle at 195, a very good price, is something that the trade's going to do a lot of hedging with, especially with it being considered a discount to the cash. Big bullish key reversal yesterday in charts. So we'll see what the days ahead bring. If I'm a producer, I mind puts, but I'm trying to leave that top side open.
Hog market was fairly decent to the upside on Thursday in futures, minus the front month April contract was down a little bit. And I know there's been some chatter about tariff concerns for pork, especially with China, but yet I think about how much pork Mexico buys. And so, I mean, I don't know. I look across this hog complex and it just feels like that in itself is also kind of following along with all the headline news here lately, Brian.
It is. It's got a wet rag over the market. We're not real sure how if these even if other countries come and negotiate and the administration decides to deal with them, if we can really see pork kind of take off without at least the perspective that China could buy at any time, right? Or they may need product. I don't think China's necessarily starving for pork meat right now. It wasn't that long ago, they ebb and flow and they had too many hogs and they've got plenty of supply and they've got plenty of feed. So I'm not so sure I'm a big buyer of that. But what I am a buyer of or believe is that the hog market relative to the cattle market still offers a very good value. And it didn't take very long at all. June cattle, if you look at the cattle, June cattle to June hogs, really widened out. All of a sudden, just really quickly in a matter of days, came right back together to about where it was 2 weeks ago or 3 weeks ago. What that means is that hogs, from my perspective, good value. The market will use the supply at this level, and that there's, I think, room for hog prices to move back up into the near 100 mark in the summer months, if not over.
What are you watching in the dairy trade with all the tariff talk and news and more here the last week or so? It looked like a relatively mixed day the last I looked at it on Thursday. I mean, what stands out to you in the dairy market right now?
Well, what stands out is we still haven't turned the corner of any degree in the cash cheese market. So when we kind of look at that, it does look like we're trying to pick up some momentum. We are off the lows. Cash cheese got under $1.60. Now you look at if you look at the barrels, $1.78 today, picking up 3/4 of a penny. Blocks up 3 1/4 cents. Nice gains there. Butter up 2 cents. But all of these markets, including whey, continue to hover near the low end of where they've been. And so we haven't seen that product pick up. Tariff activity is certainly a concern. But the bigger concern is just that the producer in the U.S. hasn't shrunk the herd enough, or demand hasn't improved enough, or either, to really move this market off sort of the center line here. And so we're getting some real consolidation, not great prices by any stretch of the imagination, but not nearly, I think, as bad, at least at the moment, that the cheese market was portending or looking at maybe 2 or 3 weeks ago, when it looked like this whole dairy market was on the verge of maybe decisively slicing through $17 and headed towards 16. Not the case. 17.22 in April, 17.43 in May, and the back months are creeping up toward the $18.50 mark. So I think big picture, we're seeing market forces find a home for the product, but we're not seeing them scoop it up. And something, at some point is going to give a little bit in the market. My guess would be is that these prices, they're not going to probably go up in the grocery store. The consumer will use this inventory.
All right, Brian, as we close it out today, final thoughts you would have for folks here on the show?
Just, volatility creates opportunity. Watch for this. We've seen a pretty big drop off in the energy complex here. Look for those opportunities in volatility. Who would think that we'd see crude oil down and corn prices up, right? So we're seeing them diverge a little bit here. Both could be good for the producer.
Brian,
Of
if
course.
folks were to reach out to you there at Total Farm Marketing, have a conversation about all this volatility, what's the best way to do that?
I'd ask for a phone call, 800-334-9779, Jesse. We'd start with that, or send me an email, Brian, and that's spelled Bryan, at totalfarmmarketing.com, and happy to field any questions you have there. I return every one of the emails, and so if you send it, we'll get back to you.
Brian Doherty with Total Farm Marketing. Always good to hear from you, sir. Have an awesome weekend. We'll talk to you next week.
Jesse, thank you. Same to you. Appreciate your time.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.